Welcome to the fourth episode of The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Due to popular demand, today we are bringing you another installment on automated trading solutions. Stacked is an automated trading platform that gives users the ability to automatically follow crypto indices, as well as subscribe to a marketplace of algorithmic trading products that include previous performance data. Co-founder of Stacked, Joel BIRCH, speaks about the genesis of the product, his time at the wildly successful startup Grubhub, the acceleration of the crypto sector as represented by his Silicon Valley peers, and offers us a walkthrough of the Stacked platform. This is an exciting and novel automated trading solution that you won't want to miss in today's episode. Once again, thank you for joining the Birb Show, and we hope you enjoy the ride. What the Birb Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto and forex-centered trading community, built to sharpen each other in capturing opportunities in the markets, while protecting capital and positions along the way. What this is not: trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions. All right, guys, thank you so much for joining us on today's show, and we're very excited to bring you our next installment in the automated trading series, backed by popular demand. And we are joined today by co-founder of Stacked, Joel BIRCH. Joel, how you doing?
Hey, I cannot complain. A couple inches of snow coming down here in Chicago, but overall, pretty good day and grateful to be here. Thanks for having me.
Right on, and we are so happy to have you. Sponge, how are you doing?
I'm good, man. Fighting off another cold, but otherwise very well.
So many of our listeners have been so stoked to learn more about auto trading. And Joel, you've developed a really tremendous product over there at Stacked. Why don't you tell us a little bit about how you got started with the project and your background and kind of where you are today?
Yeah, I'd love to. Thanks so much. And hopefully we'll have an opportunity. I can show you guys the platform as well and kind of what it looks like. But at its core, how I think most great ideas start to come to fruition is born out of need, right? Born out of a problem that we have that we try to solve. And I actually spent many years, to touch on my background, as kind of a tech junkie. Basically, my entire 20s were spent obsessing over startups and the startup ecosystem and tech products. And that led me to, in my early 20s, join a small startup called Grubhub. And if you're not in the States, if you're listening from overseas, you may not be familiar, but think Uber Eats, restaurant curation, food delivery. But this was the OG. These guys were the first to do it. They were the first to go public, become a unicorn startup. And as a result of my 5 years there, leading sales processes and, being involved in leadership, I learned a tremendous amount. And I really began to build a real passion for using technology to solve problems. So as a cryptocurrency investor, once I started getting more serious about it, I got into the space in like 2015, mid to late 2015, started active on Twitter and stuff like that, mid 2017, when people started really caring about it. I immediately saw this huge issue, which was it was way too difficult to trade for the average person. If you have a full-time job, or if you're not particularly passionate about it in general, you see the upside. You want to get involved in this prolific industry, but it's super complicated. It's difficult and it's inconsistent. And that's why places like Birb Nest are so great, right? We give people communities if they want to learn. We give a place for people to come and try to evolve their skill. But the reality is, just like most people aren't cut out to be entrepreneurs or doctors or basketball players or construction workers, most people aren't cut out to be traders either. And so we set out to solve that. We set out to build a product that allows people to automate the majority, if not all, of their investing.
Yeah, so Birch, so in terms of customers specifically, I guess like you said, you're targeting people who don't have the time to trade or the expertise. Is that right?
It's not exclusively built just for hodlers, but that is the majority of the market. We understand that at least 90% of all people globally that have or own any amount of crypto, at least 90% of those people, for lack of a better term, are just hodlers. So we do have some cool tools for traders, but we didn't set out to build a trading platform per se. We really set out to build a retail-friendly investing platform.
Awesome, yeah. And I see on the website you've got a selection of trading bots at the user's fingertips. Um, how did you go about sort of choosing which bots to use or what strategies, and what kind of risk aversion levels do they include?
Yeah, so that's a great question. The Stacked platform today, we've been in beta for a little over 90 days, private beta. So we've only allowed, invite users to test the product as we get ready for a more public launch. And so as a part of this beta, there's two primary components. One is what you just mentioned, trading algos, making trading algorithms available to people who are trading on BitMEX or Bybit or FTX or wherever, making those algorithms easy for the novice trader to use. That's one feature. The second feature is our index product. That allows your hodler to connect to their Binance or Coinbase or Bittrex account and instantly invest their available crypto or a percentage of their available crypto into a pre-built basket of crypto coins like the Bitwise 20 or the Coinbase 12 or Anthony Pompliano's digital asset index fund managed by Bitwise. Those are all products that are basically available on the platform for one-click investing. How do we go about choosing the bots? To answer your question, we didn't want to be a company that designed trading algos. What we wanted to be is a company that solved a problem for users by making trading algos easier to use. So today, if you come across a Twitter trader who says, I have this profitable strategy, we've all seen those guys, here's all the back test results, send me your API secret, and my bot can trade for you too. That's how the industry has operated for basically since the beginning of time. So what we first set out to do was find bot authors who were willing to put their money where their mouth was, so to speak, and put their bot on the platform and allow us to collect live trading data from that bot before making it available for people to subscribe to. We don't put backtesting data on our site. So how we've decided what bots to list today, we'll put any bot that wants to in testing. But if they don't meet the parameters, and ultimately if those bots aren't profitable in the real world, we'll never make them live to subscribers. Once they are live, if they start to suck, let's say they start off really well, and then 6 months down the road, they start to suck, the results are going to show that on our platform, and people are no longer going to subscribe. So it's going to create a marketplace that's competitive, which is giving users the real opportunity to tap into the few profitable strategies that might actually be out there.
Joel, you hit on some great points there. And obviously volatility is one of the huge obstacles to entry for the kind of greater public retail investor. They see, Bitcoin's up 10% of the last week. And then, the next month, they can see that, it tumbled 25%. And, while many day-to-day traders, see volatility and, they get really excited about the opportunity, a lot of investors really kind of get queasy at it. So I think that this product that you've developed has, done a great job to kind of take the grunt work out of the process and, hopefully onboard otherwise kind of intimidated retail investors. So kudos to you guys. I had a question regarding the probation process of an algo publisher. My understanding is that process lasts around 3 months. Is that correct?
Historically, put your bot on, let's collect data for a few months and go from there. Now we're finding different bots have different needs, and different bot authors have different prior success, and they can also verify that success in different ways too. So now that we're actually starting to onboard more prolific authors like Crypto Gainsey as somebody who's well known as someone who knows what they're doing in terms of strategies, for his initially the period was a couple of months, but now if he wants to add a new bot, we might put it in staging for 30 days or 100 trades, whichever comes first, before we put it out. So it's not to say that every bot has to go through some 3-month probation necessarily, but what's important to us is that we collect enough data to provide to the user so they can make an informed decision as to whether or not they want to tap into that algo. It's also important for me to point out that the algo portion of our product, right, where you're connecting, a trading bot to your leveraged futures account, BitMEX or Bybit, and having that basically day trade with leverage for you, is a high risk product that should only be used by people who know how to leverage trade to begin with. It's a great add-on for maybe the people on this call, right? It's a great add-on for those of us who understand our way around an exchange and understand the basics of trading. It's maybe a great add-on for traders in a community like the Birb Nest because they're staying on top of it. But it's not a great product for just your hodler. I do not think anyone out there who's just hodling $1,000 on Coinbase should now go and set up a BitMEX account and start running a bot, no matter how profitable the bot is. Because I don't believe that's in the best interest of the end user. And that's where our index product comes in. So it is important to make that differentiation, is that that product's not for everyone, but for traders and for guys and girls who understand the concepts behind algos, making it at least some part of your strategy. You shouldn't put all of your money into an algo. Like, I shouldn't have to tell you that, right? But making it some part of your strategy, especially with the right tools, makes a lot of sense. And we remove the need for a user to share their private API secrets with random developers on the internet. We remove the need for people to send Bitcoin to random addresses to pay for bots. We process everything in-house. We handle everything, and we just bring a good user experience to something that's more older and time-tested.
Yeah, it's really impressive, Joel. And you hit on something that I wanted to come back to. You have another product before we get into your indexes. And that's a risk management tool. Can you speak more to that? And because there's so many horror stories of, like you said, newbies getting blown up with overload crashes or spontaneous liquidations. So I know the risk management would be something that's really exciting to our listeners.
Yeah. So listen, if you're someone who's managing your own funds day trading, I actually think Dudex has a phenomenal risk manager tool that they built in. But for using our algos, what we get commonly asked all the time is, well, how can I set a stop loss, or how can I set a take profit? Now, listen, the point of running an algo is that the algo opens the trade and the algo closes the trade. You don't need to set a stop loss or a take profit. Gainsey's algo, as an example, has a built-in 5% stop loss. But that's not to say that we didn't want to make that available for the percentage of people who wanted the additional risk management parameters in place. So when you connect your stacked account, which will just be API to BitMEX or your futures exchange, to a bot, what we ask you in the setup is if you want to change anything. And what we allow you to do is, in a very intuitive user interface, we allow you to determine the amount of equity that the bot uses from your account in each trade. We allow you to determine the leverage yourself, and we allow you to determine the slippage. On top of that, even though every single bot on our platform will open and close trades if you do nothing, if you want, you can also use our platform to very easily set a stop loss, a trailing stop loss, or a take profit, or a trailing take profit. One of the reason we built that feature is because our most popular bot right now is kind of boring. It only trades 2 to 3 times a month. It's called our trend bot. It's been live for about 18 months. We actually built the product around this bot and the need for people to be able to access it more easily. But one of the shortcomings that it seems to have is it'll be up quite a bit in a trade, but because it's a trend bot and it trades on much larger time frames than some of these other bots, oftentimes it'll give a lot of that profit back to the market before it closes. So for some of our more advanced users, we wanted to give a feature that allowed them to put in a trailing take profit. And that is to say, hey, once I hit this certain threshold of profit, I want you to basically move the stop loss up so that way I can take profit, right? Even if the bot doesn't close automatically. And so those risk parameter settings just give a user a little bit more control over their crypto, which they should have. Right? I mean, you're using a bot, but you don't necessarily always just want to throw the key away and just let it ride until it goes to zero or until it gets to some number that you want to cash out. So we do try to provide some additional tools there.
That's excellent. I guess it gives the user the freedom to jump in and out of trades if they want to stop the bot at any time. I'm guessing they have that freedom.
Yep, they can just set it to like notifications only, and they'll receive signals to their phone and to their email, but it won't actually execute the trades. There's a couple of different options like that. And again, we're an MVP. We're just coming out of beta. We're going to evolve. We're going to add like partial take profits and stop losses. Right now, it's kind of all or nothing. You either are in or out if you use our platform. But we're going to continue to evolve that over time. We want to stress that we're a software service. We're bringing the UI that you're used to when you use your phone And when you interact with Uber and you interact with Amazon or whatever, we want to bring the UI that users are used to this kind of difficult world to navigate. And that's what we've done.
Fantastic, Joel. I wanted to touch on another one of your products, the Index. And it seems like there are a lot of users out there who would value a basket of products and the ability to rebalance that basket depending on, what product has, outperformed the rest and kind of, get back to neutral. So I was excited to see that offering included on Stacked. Can you speak more to some of the tools that are merging on the indices front?
So this is kind of where the whole dream began. I, coming out of like the IPO tech startup world, started to learn a lot about stocks naturally through that process. And as a part of learning about stocks, I very quickly learned about the effectiveness of indexes in the equities market. Probably everyone listening is familiar with the S&P 500. And there are countless other examples of indices that are essentially a fund that's structured around a basket of equities. Well, a lot of people don't know is that these indices historically in the equities market outperform hedge funds and traders like 10 to 1. I mean, they're very successful. Warren Buffett made a very famous bet that the S&P 500 would outperform some percentage of the world's hedge funds. And he made, I think it was $1 million bet. And he won that bet over the course of 10 years. Simply just holding a basket of stocks in the S&P 500 would have been more profitable on average by far than investing in a hedge fund or trading. And that's really unique. And so what we started to do is look at, first, do these baskets or these indexes exist in the crypto world? Because no one should be relying on Joel Birch to tell you what basket of coins to buy. That's not something I'm interested in trying to speculate on. So what we found is that, yes, there's actually a ton of indexes that have been modeled in the crypto space. Coinbase has an index. Bitwise has many indexes that are very reputable and well-known. The Bitwise 10, 20, 70, 100, which are baskets of 10, 20, 70, 100 coins that are weighted based on complex mathematical equations and all this other cool stuff. Anthony Pompliano has a digital asset fund also managed by Bitwise, and it's a portfolio that they structured. Once we realized that those existed, then we started to ask ourselves, well, then how do I buy that? If I'm Joel Birch with $1,000 on Coinbase, how do I access Anthony Pompliano's index? And the truth is, I can read about it online. I can see what it's made up of. But in order to actually buy it, I need to log into Coinbase or Binance or whatever. And I need to manually go through one by one and buy each coin and try to pull my calculator out and figure out what 80% of my portfolio is so I can put that in Bitcoin, and then what 10% is so I can put it, so on and so forth. And so what we did was we just built on top of our existing algo technology, modeled these indices in our platform. We're making all of them available for free. This part of our platform is a free product. And essentially it allows a user to one-click connect to their exchange, look through a marketplace of indices that are structured by the professionals, that are structured by Bitwise and Pomp and these other guys. Now, keep in mind, they're not necessarily sponsored by, and they're certainly not managing your money on Stack. That's not what I'm getting at. But we model these example baskets off of their public indices, if that makes sense. And then it just allows you to one-click buy that index with any percentage of your available Bitcoin. You want to throw 10% of your portfolio in an index. You want to throw 100% into an index. Our system will then backtest that index. It'll allow you to customize it. So let's say the index includes Bitcoin Cash. And if you're like me, you're going to just move that slider right down to 0, and it'll reallocate those funds to the other coins in the index. Or let's say your index, like the Coinbase 12, includes Ripple, and you're like me, and you just want to go 100% Ripple. You can do that, but for the most part, people just will connect. The index is already pre-structured. They simply determine how much of their Bitcoin they want to invest into the index. Our system will tell them and show them a back test of that index to tell them what has been the historically most profitable rebalancing strategy. This is where hodlers mess up, is rebalancing. So that's something that we should definitely talk about.
Well, Joel, you hit a great point there. Is there a way to go 1,000% Ripple?
I have tried, and the only way I found to do is with leverage. So I think on Binance, you can take up to 150x leverage.
I was just going to ask you. You were talking about the indexes there, and obviously, if, let's say, for example, Pomp makes a change to his index, would that be automatically reflected in the customer's accounts themselves? Would their portfolios switch around?
Yeah, so the fair answer to that is yes and no. And what I mean by that is I've actually showed Pump the product that I was fortunate enough to be invited by him to his office in New York about a month ago. We sat down, we went over things, and he gave me a ton of great feedback. He absolutely loves the idea of automated wealth management. And that's what we want to build this into. Right now, it's still it's a very cool product to use, but we're going to build it into a wealth management platform. So with that said, because of those relationships, I'm working to try to figure out ways that I can get someone like Pomp or Bitwise or Coinbase more involved in pushing updates to us. So, but that doesn't exist yet. That's a future idea. So today, what we basically do is we monitor the publications of these indices every day, right? And so when they publish a change to their indice, all of these different providers push that information out publicly, right? They tweet it, they put it on their website or whatever. When that happens, we will go in and we will make the changes on the tech side, and that will push out to our users. What a user will be able to do is enroll in having their portfolio automatically updated. So by default, their portfolio will rebalance if they set it to rebalance. Now, they can turn rebalancing off if they want, but what we've seen is usually in altcoin-specific portfolios, rebalancing monthly tends to be a pretty good return relative to not rebalancing. But what they can do is just say, hey, yes, if Pomp pushes an update, no matter what that update is, I want you to push it to my portfolio. And we can do that. Or they can turn that off because Pomp might come out and say he wants to go 100% Ripple, and maybe we don't agree with that. So,
got to trust the Pump.
Yeah, he was super helpful, gave a ton of great feedback. I learned a lot from that meeting.
Yeah, seems like a great dude. Do you guys have in the works, or have you already got an app that can facilitate all this sort of stuff on mobile, or is it all web-based at the moment?
Yep, just a web app today. Most people who are in our demographic using this product over the next 6 months are likely using exchanges online and things like that anyways. But we have an app being designed now. Once the prototype's done, we'll begin development on that. And we do hope to have an app by the middle of this year. So just depending on some iOS stuff.
Fantastic, Joel. And I wanted to touch on that. In addition to the app and other kind of roadmap points, you're an MVP right now. What are some of the other tools or products that you're looking to incorporate into Stacked for the next round of expansion?
Yeah, that's a great question. I appreciate it. So one thing that we're trying to stay true to here is not getting caught up in in getting too feature crazy. So I will answer the question, but before I do, I want to stress that we're not really interested in building a super robust trading platform. As I said at the beginning of the call, there are already some great services for that, like 3 commas as just one example. If you want to get super complicated and do all kinds of crazy orders and stuff, this is not the platform. Our platform and how we're looking to evolve it is to be very much like the Robinhood of crypto, or like Wealthfront, or even Acorns for crypto, probably minus the roundup feature, right? Because that's not an original idea. A lot of people are doing that. But we want to have a platform where you can log in, you can keep control of your crypto on whatever your favorite exchange is, and at some point in the future, Ledger Wallet, offline, etc. You can subscribe to some type of large-scale strategy like an index, and then you're just from there using it as a portfolio app. Some features that we're really excited about that we will be rolling out is the ability to do like tax loss harvesting, some high level investment strategy, giving users more tools on the back test front so that they can, if they want, see how different allocations and rebalancing strategies change over time. We also are going to be rolling out a feature today. If you want to buy an index, our system will only pull from your available Bitcoin. So you have only Bitcoin on Binance, that's great, if Binance is your exchange. But if you have only altcoins, then today what you would need to do in order to buy an index is first you'd need to log into Binance. You need to sell some of those coins into Bitcoin and then log into Stacked and then buy an index with the available Bitcoin. That's not a great feature either, right? So we want someone to be able to connect their exchange, instantly show their real-time portfolio, which it does do that already, but then be able to interact and move a percentage of your existing portfolio into Bitcoin through Stacked. And so that's a feature we'll be pushing out. I would say the highest priority for us, though, right now is exchange integration. Doing exchange integration correctly and securely is our utmost priority. So we've actually already done work with Binance, with Bybit, FTX, and a handful of others to ensure that we're able to offer this experience in a smooth way. So what you can look forward to as a user in the next 90 days, partial take profits and stop loss on the bot marketplace, a much cleaner mobile experience. Indexes will be officially live. Right now, they're actually not available. They're available in testing for us, but they'll be officially live. And more exchanges. Those are really our big focuses over the next quarter.
I just wanted to switch the discussion back to something you mentioned a little earlier on. You were talking about the sort of dark side of bot investing. People transferring Bitcoin over to random people on Twitter or handing over APIs. Obviously, people nowadays will be a little bit more in touch with the security side of things. And I just wanted to ask you guys, what would your solution, or what is your current solution to the sort of security that you have for customers using your APIs?
Yeah, so the first thing is ensuring that we're working with exchanges who have their shit together, if I can say that. Meaning they have robust APIs like Binance, you would expect, or Coinbase, BitMEX, right? So right off the bat, the thing that makes our platform very powerful and what makes us able to offer what we're able to offer is that we are a software. We do not take custody of your crypto, so you don't send your crypto to us. We're not a wallet. We do not have withdrawal privileges across any of your exchanges. All of your API keys and secrets are obviously encrypted on the back end, so they're not visible by me or anybody else on top of that. So the beauty of working with an API is that the user, when they create their API key, gives that API certain permissions. No one else determines those permissions but the user. And as a part of setting up that API to integrate with Stacked, the user will make sure that the API does not have any type of withdrawal permissions. So that way, even if for some reason their Stacked account was compromised, they were phished or they didn't use 2FA or whatever, no one would be able to actually move those funds. And so that was important to us. Maintaining non-custody is important to us. That may evolve in 2 years. I'm sure if that does, someone will pull this clip and say, you said you would never. We'll see. We're going to build a product in the best interest of the users. But right now, we're not interested in being your custodian because that's difficult and costly and has regulatory concerns. So I guess the short answer is we put as much power into the hands of the consumer as possible without requiring them to do anything like they have done historically, which is, maybe fill out a Google form online and then send some Bitcoin over to a guy who's going to run a bot for them. You keep your crypto in your possession. You set your risk parameters. You set the API permissions, and you use our software because it was designed with the user experience in mind.
Right on, Joel. And I think you addressed those concerns, readily. So I appreciate that. I would be remiss if I didn't ask on behalf of some of our listeners. You say that you have been in the crypto space since about 2015 and kind of got turned into it during your Grubhub days. Utilizing that network of tech professionals and kind of visionaries on the technology side, what's the overall vibe in terms of, okay, this is really what we're looking at, 5 years out in that kind of tech prognostication?
Yeah. I have been fortunate enough to network and meet a lot of really bright minds in the traditional tech startup space. Our VP, COO, CEO, co-founders at Grubhub are all brilliant individuals and very successful. And I have had the opportunity to speak to many of them about crypto. And what I can tell you is that the answer is much the same, whether I'm asking my doctor or my neighbor or the CEO of Grubhub. And it's, if they're not familiar with it, then they, for the most part, say, well, maybe something's there. So I don't feel like a lot of people are really against it strongly, but I also don't see a lot of people who aren't particularly familiar saying like, yes, I definitely want to jump in. And that's where, we talk about mainstream a lot. The reality is crypto is mainstream. It's a $200 billion market. It's going to be a $1 trillion market. There's no doubt about that. And it may be a market that's solely used for crowdfunding startups, making speculative, high volatility trades, and that may not be a bad thing. I don't think you're going to find a lot of people who aren't just like earlier fans of crypto in the traditional tech sector say, I think blockchain is the future of the world. I think most of them will tell you, like, I don't know, but I believe it's possible. But I do meet with venture capitalists and investors as our own process when we raised money before and everything else. And one thing that pisses me off the most is when people say, I believe in blockchain, but not Bitcoin. And that's what you hear a lot from that traditional sector, right? If you drop into Silicon Valley and start interviewing founders about crypto, I can guarantee you'll hear 9 out of 10 interviews will go, well, I definitely believe in blockchain. I'm not so sure about Bitcoin, which is kind of an oxymoron. But that's what I hear. That's my anecdotally. I have my own beliefs on where this industry is going to go and what it's going to mean for people. But from what I've seen, it's kind of it's like lukewarm. I would say lukewarm reception.
And I think that our listeners can extrapolate a pretty good idea of where you see things going, seeing as your current venture is, well, crypto-centered.
I'm bullish, as that's a surprise.
Right on. Well, I think that we've covered some great points for listeners today, and we're going to have a lot to dive into as the product continues to develop. But what you've done so far is very impressive, and we're excited to have had you on. Do you have any kind of closing notes for listeners, or just ideas you want to throw out there, be it crypto stack related or otherwise, for just kind of things you're looking at moving forward in the market, and general musings?
Sure, absolutely. Well, first and foremost, thanks again. I really appreciate it, and I've always enjoyed seeing the content and everything your team puts out, and really appreciate that. One thing I want to say is, again, I did mention that we have been in private beta. We are public beta for our bot marketplace today, and within the next couple of weeks, we'll be public beta on our index product. With that to say, though, we're not untested. We've done over $70 million in volume since we launched our beta in September. So we've pushed a lot of volume through the platform. Last month, if you take all of our users, you take all total user losses, and you add it to all total user gains on the platform, there was about $40,000 in net profit made from our users. And this is on a small user base of just a few hundred people today, with about $1 million currently connected to the platform. So there's a lot to be optimistic about. Those are just some fun facts for street cred. My musing would be, people sometimes turn their nose up to bots, rightfully so, because most that you see out there are based on BS backtesting data with no real results. And most strategies are very simple and or unprofitable after you take into account fees and things like that. So we built this platform to have transparency, so that way the best bots can survive. And I would encourage listeners to be open-minded, because 86% of the traditional equities market is algo run. Automated trading strategies are going to continue to evolve. And even if you're not looking to be a leveraged day trader, someone who's got positions open and closed all the time via some type of complex trading algo, if you're a long-term investor in this space, I would implore you to do research on indices, the historical performance of crypto indices thus far, and encourage you to consider, in a non-financial advice kind of way, having some exposure from your crypto stack in some type of indice, just because historically, they've just been the most profitable. We show that performance history on Stacked. So if you look at the index that's modeled after POMPs, or the index that's modeled after Bitwise or whatever, we show the full performance history. POMPs, just as an example, in the last year, 12 months, is up 177%. So that's probably outperformed most people listening in the last year. And that is with exposure beyond Bitcoin, right? That's with exposure to a slew of about 10 different coins. There's a lot to be optimistic about when it comes to automation. And I would encourage your listeners to continue to do some research and really consider having some percentage of their portfolio allocated to a longer term passive rebalanced index investing strategy. So that's kind of my pitch.
It's a great pitch. I totally agree on all points. I just wanted to move on to sort of what's going to be most users' biggest question, which is pricing. So how much is this going to sort of set users back to use your platform? And do you have different pricing tiers?
Great question. So again, the index product is going to be more publicly available in a couple of weeks. When that launches, and for the foreseeable future, we have no plans to change this today, our core portfolio management / one-click buy an index tool for the hodlers out there will be free. That's a product that we're not going to be charging for. We're working to provide a solution to exchanges. What we know is that like I said before, 90+% of people with cryptocurrency exposure are not actively trading. They do not log into their exchange. They do not make transactions. And as a result, they do not drive value to the exchange. So we're working directly with exchanges to not only make users more profitable and give users more tools, but also re-engage them on the exchange side, which is going to generate volume for those exchanges. So we're able to offer that product for free. On the algo side, that product, again, is not for your average hodler with a couple $100 on Coinbase. That product is for the traders out there. That product's for people who are looking to test different strategies and be a little bit more aggressive. And the people who write the algos, the bot authors themselves, of which right now we work with about 15, we'll probably have 50 within the next 3 months, they set the pricing on their algo. So they determine how they want to charge for it. And we are simply acting as a marketplace and like a user management, if you will. We're the ones who handle the payment. We handle the onboarding. So as a user, you can feel that all your information is safe because it's with us. It's not with the bot author. They're not handling your payment processing or anything like that. We really just provide that all in one solution. But the author, if he decides that he wants it to be $100 a month, then it's $100 a month. If he wants it to be $400 a month, then that's what it is. And the user will decide, which one makes the most sense. Right now, our bots range from $100 a month up to about $400 a month, depending on the bot. Again, they're not our bots, so don't yell at me about the pricing and don't yell at me about the performance either. The performance is there, it's transparent, and if a bot does have a bad string, and by the way, bots are not a get-rich-quick scheme. If you see a bot that is up 100% this month, that does not mean it'll be up 100% next month. There's always risk. There's always bad trades that happen. Bots do lose money, so keep all that in mind as you go into it. And just keep in mind also that on the Stack side, we don't own those bots, right? They're provided by the authors, and we're just providing a safer and easier way for you to use them.
Well, Joel, like I said, it's been a pleasure having you on, man. And before we let you go, I would love for you to screen share with us and kind of walk us through the Stacked platform and what customers can expect to experience there.
Yeah, I'd love to do that. So taking a look at my screen, I'm going to show you two pieces. You guys are going to be the first people ever in the world outside of my team to see our index product in action. But I'm also going to show you the product that we have live with users using today. And so that's where we'll start. What you're looking at here is the Stacked platform. And you can see 100% of my portfolio is currently in Bitcoin on this account. And that's because the only account I have connected to at this time on this platform is a couple of BitMEX accounts. And I actually have more than one account connected because I'm running more than one Bitcoin bot. And you can't run two bots on the same account if they're trading the same asset because they could obviously disagree with one another, and that doesn't work. So you can set up multiple accounts. You can run multiple bots across multiple accounts. And that's what I'm doing here. So just as an example, this is what that looks like. And here's our bot marketplace. Within our bot marketplace, you'll see our different bots. You'll see all of their live trading data. As I stressed, we do not use backtest data on the platform. These are bots I'm subscribed to. These are bots that are available to subscribe to. This is what all of your users would see because they wouldn't have any subscribed. So they would go in, they can look at all the history of the particular bot that they're interested in. Before they buy it, they can read information about that bot, and then they can, of course, subscribe to that bot. This is just one example. And so that's what it looks like. Very, very intuitive user face. And we have a bunch of bots coming soon. These are all bots that are in the queue that are collecting data that we're not making available just yet, including Moon Overlord's Bitcoin bot and others. So we have a lot to be excited about. What you see on my page here are the bots that I'm subscribed to. And in this example, I'm subscribed to two bots currently with active cash, and that's the Trend bot and Gainsey's Bitcoin bot. Now, as you can see, Gainsey's bot is currently in a short, and it's down a couple percent, whereas the Trend bot in my case is in a long at 8,900 and is still holding. So we'll take a look at this one first. As a user, all you're doing is you're connecting your account, right? So you're choosing the account that you already connected to Stacked. You then use this slider to determine how much equity you want to have the bot trade. And all of these bots have default settings if you're not really sure what to do. You're also then determining the leverage. Again, this is just going to determine how much leverage the bot uses. And I recommend being very cautious by using high leverage, especially with algorithms. You can get liquidated in a hurry if you get too fancy. And then these additional exit parameters I told you about. Now, I don't need to set a stop loss or take profit, right? This bot opened along at 8,900 and it's going to close at some point. I don't know when. It's just still holding this long. It's doing quite well for itself. I can close it right now if I want, but I'm just going to let it close. If I wanted to put a little bit more, risk parameters around it, I could set a trailing take profit or a stop loss as an example. That's how easy using a bot is, right? So you connect your BitMEX, you select your bot, you determine your equity and your leverage, and you hit save. That's it. I mean, it doesn't require anything more advanced than that. This is an example of, I actually am not in a position on this one because I manually closed it, but you can see this has a short open. It's currently down a few percent. You can see the entire entry history, order history, trade history, everything built in beautifully on Stack. And then before I hop into indexes, do you have any questions on that?
So, yeah, it looks like a great product, and your associate Alan had walked me through it before, and I was really impressed by what I saw. I did want to clarify something for potential customers and listeners. With the and feel free to share as much or as little on this as you feel inclined to do. But as far as your average customer and their, say, portfolio size against the average subscription fee for a monthly bot, Alan had shared a figure with me that was really impressive for month-to-month performance, and even taking into account the subscription fees. So for, say, quarterly performance or monthly performance with, let's say, an average associated account size of 1 BTC, what has the performance looked like accounting for those subscription fees?
Yeah, so subscription fees, they're, again, they average around a couple $100s a month. And so if you're looking at that on a average quarterly basis, let's say that the average bot is going to be $500 to $600 a month, right? So if you're trading with, and we'll use less than a Bitcoin, because the reality is the average person has about $3,500 on, that they would use in this example. You need to be able to make at least about a 20% return on the quarter to break even on the subscription fee. So far, we've seen that because the bots that win, the bots that users decide they want to subscribe to, are bots that have had success and continue to have success. Last month, total, and I think I said this earlier, but total losses of all users plus total gains of all users was a plus $40,000 profit. So needless to say, on average, everybody's bot was more than paid for. In many cases for the year, we have some traders who are trading with a large amount of money, and we have a couple that made upwards of $20,000 or $30,000 last month. So at $300 a month for the bot, it's a no-brainer, right? But again, this product is more expensive. Most of them, we're talking a couple $100s a month. That's not designed for someone with $500 in crypto. That's what the indexes should be used for. But so far, we really do measure the health of the business on the success of our subscribers. And so far, in our admittedly limited sample size of a couple hundred users and 3 or 4 months of beta testing, we've had a ton of success so far on that end.
Our listeners are really going to appreciate you jumping into the fray, because that's can be a pretty prickly point, and it sounds like the numbers speak for themselves.
I was just going to say, if you can still see the screen on the Bedrock bot, if we look at June to August, this bot has been running for almost since May 2018, so a little over a year, and it was up using the default settings of 20% equity and 7x leverage. It was up 500% just about. If you subscribed to the bot back in May, that's great. If you subscribed to the bot in June, then you spent the first 3 months running this bot losing half of your portfolio. Before, as you can see here, the bot made a nice little recovery. It just continues on this upward trend, and it's continued to have success. And now it's at like all-time high in terms of profitability. But depending on where you jump in too, if the first trade you take is a loser, that's going to affect your results differently. So again, I do want to stress too, we make as much of this data available to you as possible. Again, this is not backtest. But the past can never predict the future. And tomorrow, this bot could go to zero. those possibilities exist. And so that's something that won't happen in an index product or in a spot product. But on the futures side, if you don't know what you're doing with leverage, or if you overexpose yourself, you can get in trouble really quick. So I like to continue to point that out because I think users hopefully appreciate that level of transparency.
Absolutely. And why don't you go ahead and show us the Indices products?
Oh, I would love to. So I've been using this now for a couple of weeks, and it just makes me so excited. So this is another example. This is a dev environment, so it is connected to a real Binance account, but it's the same exact platform. Just pretend that my bots are filled in over here. I just have them connected differently. So again, I'm connected to Binance, and I don't need to have Binance open. I don't need to be logged into Binance at all, but just to show you, I'm logged in. So you can see what it looks like. So I have a little bit of Bitcoin and a little bit of Ethereum in my Binance account. So I connect Binance, I go to my dashboard, and here's my portfolio, a little bit of Bitcoin, 90% Bitcoin, 10% Ether. If I wanted to buy, let's say, an index modeled after Pomp's digital asset fund, I can go into my index marketplace. In this example, there's 4 indices here. By the time this is live, there'll be at least 15 indices. You can see the full performance history of each one, as well as a little bit of information about it. But all I have to do is come in, select my Binance account, determine how much of this particular account, how much of my available Bitcoin I want to use. Now, most successful indexes, guys, are already majority Bitcoin. They're like 70 to 80% Bitcoin. So in my case, in this example, I'm going to put all of my available Bitcoin into the index because most of the index is Bitcoin anyways, if that makes sense. However, I really dislike Bitcoin Cash, so I'm going to get rid of that. I already have Ethereum, as you guys saw, so I'm going to get rid of Ethereum as well. And I'm just going to kind of give myself a little bit more exposure to some of these other coins like Tezos, as an example. And maybe I like Dash for one reason or another. This is the composition of Pomp's fund that I customized a little bit. Now, most of you may not want to customize. That kind of takes away from some of the initial kind of proof is in the pudding in terms of the indice itself. However, we want to give you that opportunity. I'll then be able to run a back test. This will load for about 30 seconds, but what it'll do is it'll tell me for this particular setup, historically, if you were rebalancing, these would be the results. And in this case, the most profitable strategy on the original Pomp index is a quarterly rebalance. What I may find after this loads up is that it's a monthly rebalance or something to that effect. So as you can see, quarterly is the most profitable. And this is actually, I made these changes and I added a little bit more Tezos. Historically, that would have been quite profitable and actually 29% more profitable to rebalance quarterly. Having this information at my fingertips is super helpful for me to determine how I might want to rebalance. It's not to say that it's guaranteed to be the most profitable in the future, but it certainly helps. I'd rather have this information than not. So I will make sure rebalancing is enabled and I will have it rebalance quarterly. I'm then just simply going to click Add Index to my portfolio. There are no order books. There are no depth charts. There is no TA. This is an investment platform. We give you a foundation to build on. Now, we're going to give you the ability to build your own custom portfolio from scratch and things like that for the percentage of you that want that. But I really encourage you to say, look, man, these portfolios that have been designed by experts, they have really, relative to Bitcoin and relative to my personal holdings, they've really killed it. Most people's portfolio since the early part of 2019 don't look like this. That's just a fact. Most people have rode their coins down to zero. So I've placed that order. As you can see, now my portfolio is updated. It's not just Bitcoin and Ether. And now, as you can see on the back end, it was Bitcoin and Ether. Again, you don't have to be logged into Binance. It's just to kind of show you. I just give it a quick refresh and you'll see now I have a completely, diversified and itemized portfolio. And all I had to do was click a few buttons, didn't require any technical know-how, and I'll be able to start monitoring the performance of this asset. As a final thing that I want to show you guys, because I'm so stoked about it and I don't want to get too long-winded, very simple feature like the ability to de-risk. I can come back into this portfolio later, and if I want to take 25% of my exposure out of crypto because I feel like Bitcoin's going to dump or something, I can come in and I can move any percentage of my portfolio instantly and equally weighted across coins to a stable coin like Tether. and update my portfolio instead of having to go one by one through each coin and sell a little bit for Tether, or only sell Bitcoin for Tether, or whatever the case may be. I can, in a complete weighted fashion, de-risk my portfolio instantly. And as you can see, I've just taken 25% of my exposure out of the market. That's stacked, guys, and that's what we're excited about.
That is insanely smooth, man. I really, really like that I love the user interface. It's great. There's so much control there, and it's awesome that you can actually have that control over the assets themselves, and you can change percentages here and there. It's awesome.
Yeah, and agreeing with what Sponge said there, I just love the way that your platform takes the intimidation factor out of it, and really makes it as simple as your ability to use a slider across multiple assets or multiple indexes, whatever. Like it does have an institutional grade feel and very sleek. Your experience at Grubhub and expertise really shines through here. So well done.
Thank you, guys. I really appreciate the positive feedback, and more so, I'll be looking forward to getting feedback of anyone who uses it, who might be listening to this. Do not ever hesitate to hit me up on Twitter or anything, because we're in this stage right now where we're trying to go into hypergrowth, right? We're still figuring some different technological things out in terms of user features and feedback, and so it's extremely important. And your feedback is really important as well. So I appreciate that so much. Thanks for letting me show it to everybody.
Thank you, Joel. Yeah, and you gave me a great lead in there. Where can listeners find you on Twitter or the Stacked team?
Yeah, so I'm just at Bitcoin BIRCH, and the Stacked handle is at Stacked Crypto, which is also linked in my bio. So if you just want to chat with me, I think my DMs are open. I go back and forth, sometimes I had to shut my DMs off for a while and then I'll turn them back on. So I think right now my DMs are open if you want to slide in, but otherwise you can contact us through the website. And I think you guys have a link, right?
Absolutely. And all that will be listed below in the show notes. Sponge, did you have anything that you wanted to take us out on, or any kind of closing notes from you?
No, not particularly. I'm just really impressed, to be honest. I think the user interface is great. I think Joel's really articulate and explained everything really clearly and well. And I love the options. The fact that you can have bots, and not just bots, you can have any choice of bot, and you can subscribe, and there's data there to show you the profitability or the current orders and trades. I think it's just a very all-inclusive platform, and it's awesome.
Thanks, guys. That means a lot. We've been working on it for a long time.
Yeah, and demystifying this sector and these instruments is no small task. So you do that very, very well. And now that I'm done blanketing you with compliments, sir, I think we will go ahead and wrap up the show. Joel, thank you so much for being here. Sponge, thank you for being here. And it's been a great time speaking with you guys. Cheers.
Thank you so much.
Thanks.
I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to visit the Stacked platform today at thebirbnest.com/stacked. Joel Birch can be reached on Twitter at Bitcoin Birch, where Sponge is at SpongeCoinBob, and I am at Benjamin T1717. If you've appreciated the depth and breadth of what you've heard today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us at thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. And finally, after much demand, we're excited to offer a host of delicious merch. Find an assortment of comfortable hoodies and other gear to sport your Birb Nest pride and style by visiting thebirbnest.com/merch. And be sure to check out @CryptoBirb on Twitter for ongoing merch giveaways and more ways to participate with our community and grow alongside us. This podcast has been brought to you by the Birb Nest. Thank you, and trade on.